Welcome to the Harford Retirement Show, where we're going to be going through and talking to professionals and small business owners and entrepreneurs and talking about different things that investors or other professionals might be interested in. So, joined with me today is Dave Beck with Disability Insurance Services. So Dave, thank you for joining us.
Thanks for having me.
Absolutely. So Dave, we met, I would say, a few months ago.
Yeah.
And actually connected through LinkedIn.
Yep.
And developed a little bit of a working relationship.
Correct.
And I thought that it'd be interesting to share with the audience a little bit about what you do and also why both of us probably think that it is so important for people to be more aware of what you do. So, in 10 words or less, what do you do?
Man, 10 words or less. So, I would say this. I help create time for financial advisors in the disability world.
Help create time for financial advisors in the disability world.
Yes.
I'm not counting. I think that's under 10.
Is that under 10? Sweet.
So tell us a little bit more. So how do you create time for financial advisors, and what does Disability Insurance Services do?
Right. So Disability Insurance Services is one of the largest distributors of individual disability insurance in the country. And we're wholesalers. So what we do is we partner with independent financial advisors like yourself, or the career advisors like the Masses of the world, the Northwesterns of the world, property casualty agents, and what have you. And disability insurance is often the underpinning of a sound financial plan. But what we've found is a lot of financial advisors aren't necessarily the most comfortable with it. They know enough to be dangerous, bringing it up. They believe in it. They see the need in it. But what they're good at is accumulating those assets for retirement, like Harford Retirement Planners.
Right.
What I'm good at is taking the time, giving them time and taking the work off their plate when it comes to disability insurance. Because when it comes to DI, as you know, there's a lot of moving parts, a lot of language, and a lot of things that can get messy really quick.
Now, how's disability changed, I would say, in the last 10 years? Is it largely similar, or have there been a lot of changes that maybe somebody that looked a decade ago at disability and maybe did or didn't get it for a reason, how does that space look different now?
Yeah, so I would probably answer that in two ways. From the financial advisor standpoint, there's way less insurance carriers than there were when you and I were probably in high school.
Sure. Long-term care's followed a similar path.
Exactly. They've kind of, the market shrunk as far as carriers that are offering that type of strategy or product.
Right.
But the good news is, for the path forward for the clients, the underwriting has really loosened. Now, that's not to say they're going to take on a bunch of risks that they normally wouldn't. But back in the days of, if somebody was a diabetic, that might preclude them from being able to secure coverage. Today, there's actually a path forward for those people.
Right.
So they don't have to rely on their money. They can, pennies on the dollar, buy something to help their disability need.
Sure. And I think from our conversations a while back, the thing that I found so interesting was kind of the capacity that you serve, where you aren't competing against financial advisors.
No.
You're enhancing the advisor's relationship with their existing clients.
Correct.
Do you want to talk about that a little bit?
Correct, yeah. So back to the creating time for financial advisors, and when they're accumulating assets, doing the reviews, talking about the coronavirus, where it's just red tickers on the screen.
Right.
You know, so when it comes to this specific topic, is I shop the carriers, I shop the markets, I take that client-specific risk, and I take all the guessing off of your plate.
Right.
And we put together a tailored plan that not only is going to help that client, but is also going to be positioned properly inside of the financial plan that you're building for them.
Right.
So it's not square peg round hole. It's actually a good solid fit.
Right.
And to take it one further, with me when it comes to disability insurance and working with financial advisors, my boss will probably hate me for saying this, but there might come a time where the need doesn't make sense.
Right.
for the insurance.
So give me an example. So what would be a situation where somebody doesn't need disability insurance?
When they have heeded all of the advice that the financial planner has given them to diversify all their assets,
Right.
diversify their income.
Right.
You know, there's passive and earned income. If there ever becomes a point where passive income meets or exceeds earned income, there's an argument to where disability insurance doesn't make sense.
Right.
Because if they're too sick or injured to work, that passive income isn't going anywhere.
And correct me if I'm wrong, but fundamentally, it's when someone depends on your income and that income's not there because of an illness or a disability, that's where disability insurance kicks in.
Correct.
So if somebody has enough money that they don't need that paycheck anymore, they probably would be a candidate that might not need disability insurance.
Correct. Yep.
Yeah, and that's interesting because most insurance people would say that insurance is the solution for any situation.
Right.
So that's refreshing to hear.
Yeah, absolutely.
So being an independent financial advisor, my clients, and I think most clients, really value the independence and getting that objective advice. Do you feel that advisors, and maybe advisors are not necessarily independent, but still can benefit from the independence you offer?
Absolutely. Absolutely. Because we have an objective view from disability insurance too.
Right.
Our job is to just make sure that we're finding the best carrier that fits that client's risk.
Right.
We're carrier agnostic. We have the 9 carriers that we can choose from, but we're not beholden to one of them.
Right.
Yeah.
All right, Dave. So let's go through, I'm a numbers guy, so let's go through some of the stats. In my experience working with clients, there's really 2 different types of claims. You have injury and illness, which might be surprising. Which one is more common?
In the disability world, it's about 90% of claims are caused by illness. Which
Now, everybody thinks it's the bus that hits you, right? The proverbial bus, and that's why you're disabled.
That's right.
But it's illness 90% of the
About
time.
90% of claims are due to illness, not injury. Correct.
I think a lot of people, when it comes to disability, you have 2 options. You can insure it and use the insurance company's money, or you can self-insure it where you use your own money, whether you have enough or not.
Correct.
Right?
Yeah, absolutely.
How often, when people don't get disability insurance, what's the likelihood that someone becomes qualified for benefits for disability?
It's about 1 in 4 right now, according to the Social Security Administration for DI. Those stats, about 1 in 4 of people that are before the age of retirement, they're using the word millennial now, which we fall into that category.
Right.
So 1 in 4 of us are going to go down for 90 days or more.
Right.
The average claim is 2.5 years. And then to take that a step further when it comes to financial planning, it's about 1 year of claim can wipe out 9 years of retirement.
Right.
Because your income stops, you stop being able to contribute to your qualified accounts and your retirement accounts that you're working hard to build for them.
Sure.
And then, but their medical bills tend to skyrocket.
Yep.
Yep. So it's kind of like this switch of expenses to income.
Yeah.
And so that can be pretty detrimental to any financial plan.
Yeah, I know from a financial planner's point of view, planning for retirement's easier when you have savings and things. And if you're not working and you're not collecting any money, or you're collecting some small fraction of what you were used to when you were working, you can't save, and that pushes everything back. So that number doesn't surprise me if that's the average.
Yep.
So 2.5 years on claim. So that means that whatever the qualifying event is, the average claim is 2.5 times. Now, how long will disability insurance actually cover you?
Yeah, great question. So it depends on the structure or the design of the policy that you buy. And working with guys like you that work with people like myself, we can tailor that to fit your specific cash flow needs.
Right.
Because you got to be able to pay the premium.
Right.
Like that's the big part. So typically what you see is a 90-day elimination period where the client's got to self-insure. They got to wait that 3 months. That check actually comes on day 120 at the end of that 3rd month. Really
So typically you have that 3-month wait before you get anything.
Correct.
And then the premiums start to come in.
Yep. And then
the
benefits.
And then the benefits start to come in.
Exactly. So the typical design, you see a 90-day elimination period to a benefit of 65, because that was a retirement age.
So 65 months or age 65?
Age 65, great. Thank you. But now you're seeing benefit periods to age 67, which is now the normal retirement age, or to even age 70, because people are working longer
Right.
nowadays. Yeah.
So are the benefits, so let's say that I wait my 90 days and I now can claim, I'm on claim, I get my benefits. Are the benefits that I receive taxable?
No, typically they're tax-free.
Tax-free?
Yes.
Now what makes them tax-free?
Because we're using wallet money. We're using money that's already been taxed by the United States government.
Okay.
So it's after-tax wallet money.
So kind of like life insurance, where assuming you're not deducting any of the premiums through a business, if you're a business owner, if you pay after-tax dollars, the death benefit on a life insurance policy is tax-free.
Correct.
Same thing with disability income replacement.
Correct.
If you use after-tax dollars.
Absolutely.
Interesting. So some folks watching might have pre-existing conditions, and they might think that these conditions would disqualify them from getting their own disability insurance coverage. So let's do a quick take where I'm just going to rapid round go through some different pre-existing conditions, and you tell me if that's something that can get some coverage or no, not at all. All right?
Yes.
Diabetes type 2.
Yes.
Diabetes type 1.
Be very hard.
Probably not, but
Probably
not totally.
Be very hard. Yeah.
Anxiety.
Yes.
Heart attack.
Yes.
How many?
How many heart attacks?
Yes.
Oh man, that's typically you got to have X amount of time past the last heart attack, and then it's going to be a lot of us lobbying the underwriter.
Okay. Obesity.
Yes.
Dementia.
Yes.
Alzheimer's.
Yes. So with those two, dementia and Alzheimer's, those are covered. If they already have it when you're going to apply, that would be a no.
Okay. Back injuries.
Back injuries, yes.
Where would a back injury be a no?
If they got a lot of metal going on there, and depend on how recent it happened.
So if they have a really tough time getting to that airport metal detector, it might be a little bit dicey.
Yeah, if they're a little bionic, it might be tough.
Okay. So $6 million man, not going to be able to help them.
No.
But probably would need help, right?
Yeah.
ADHD.
Absolutely. Yes, you can get it with ADHD.
And what about Crohn's, colitis, some of those gastrointestinal?
You can. There are carriers that will offer based on the existence of Crohn's or ulcerative colitis.
Okay.
Yep.
Now, so Dave, I know that everybody would love the coverage, but it's the premiums that people typically don't get too excited about.
Correct.
And that's probably where a lot of people just end up not getting disability policy. What are some of the levers? Because the policies aren't super cookie cutter. So let's say you have an average person who just can't swing X amount of premium.
Yeah.
What would be some of the things that you would look at to make it more affordable so that person wouldn't be left without any coverage?
Right. So there's a lot of riders, as you know, attachments that you can put onto a policy.
Right, different options for the
options
policy.
That have different triggers to give different benefits. Typically, there's really one rider that I would be very hesitant to strip off.
Yes.
To make premiums more palatable. There are others that I would strip off as long as they understand and have a crystal clear view of what they're leaving on the table.
Right.
But getting into that, so catastrophic disability, the definition of that is basically long-term care. You can't perform 2 activities of daily living. You have a severe cognitive impairment.
Right.
This is going to pay you an additional benefit on top of that base benefit. It's a really hard trigger to hit. It's not an expensive rider, but that might be one of the first ones to start taking off to lower some premium.
Okay.
Maybe a cost of living adjustment rider, because a lot of those, I think they're good, but a lot of them are indexed. So you're paying for 3%, but it's whatever the CPIU does in that year while you're on claim.
Okay.
So if the CPIU does 1%, you're paying for 3, you're only going to get the 1.
Right.
If it's CPIU does 4, you can tell me if it's ever done that. I have no idea. I don't think so. But you're only going to get 3. You're going to cap out at 3.
Okay.
So maybe take that off a little bit. I think that's really good for the younger people like you and I that might be on claim longer that have a longer time horizon for investing,
Right.
because that keeps pace with inflation. The older 45s to 50s or younger, maybe not so much a need there.
Now, is somebody too old to get disability policy?
There are carriers that will write up to age 75 as long as they're working.
Okay.
Yeah, so you have to have that earned income, that job, that occupation, and up to age 75.
And for business owners, how difficult is that for underwriting? If you don't have a W-2 income and you're drawing from company accounts or something like that.
K1s, 1099s, yep, absolutely. P&L statements.
Right.
Yep.
So
It's not that difficult. It's a little bit more difficult on the underwriting side because you got all these tax forms.
okay.
You got more than just a W-2 and a 1040.
A little bit more homework.
Yeah, you got Schedule A's, Schedule B's, Schedule C's, Schedule K's.
Right.
That are proven income. And then a lot of business owners might have separate LLCs.
Right.
Then
It gets complicated.
Yeah, all those other tax forms, yeah.
Sure. So a lot of clients that I work with, they'll say, Joe, I've got disability at work. I checked the box. I'm fine. That's not always the case. Do you want to talk about work coverages and why someone might consider their own individual policy?
Absolutely. So, and that's a fair question, fair topic to bring up, and basically the number one objection I get when we're talking about disability insurance outside of work benefits. Work benefits are great. They're often given to the employees free of charge, especially in the disability space, to where the employer's paying the premium. And what we do as disability insurance service for financial advisors and your clients is we review those for them. Because we want to make sure that it's crystal clear for them, because the reality versus the expectation is far off.
They think they have this, and they really have this. There's like all those different memes where it's like, what you think you have, and then, whatever.
Yeah, exactly. And I think we owe it to the clients to make sure that they understand that.
Right.
And to show them that there's ways to enhance this.
Because when would most people find out that what they thought they had isn't really living up to what they actually have?
Claim time.
Claim time. When they are sick or disabled or both or whatever and they're on claims, they realize they're under covered.
Yeah. So, and where that comes in is, typically it'll be 60% of base earnings up to a monthly cap. And then there's a definition. I'll get into that real quick. But let's go to that 60% of base earnings.
Right.
Because group insurance has to be given to everybody at that employer, the same.
It's like a one-size-fits-all suit.
Exactly.
Ned from accounting and Tina and receivables has to be able to fit in that one policy suit.
Exactly. And Tina might be making $300,000 and Ted might be making $100,000, so
Sure.
But they get the same coverage.
Right.
And so it's 60% of base earnings. And if one of those employees is in a commissioned or bonus, or maybe they're an owner with a K1 or something above a salary, none of that's going to be covered under their group plan. So it's 60% up to the cap, and the cap on smaller groups tends to be smaller. So if you get 10 to 20 people, it might be anywhere from $6,000 to $10,000 a month.
Okay.
And then back to the employer paying the premium, that's going to be taxable because the employer gets a tax deduction.
Sure.
And then on claim, that's where the IRS is going to get their money back from you. So you're going to get that 60% of your base earnings up to $6,000 and then taxes on that. So if you're exhausting the cap, let's say you walk with $4,500 and you've been making $150,000. Are you going to be happy? Is that going to be the lifestyle?
Is that the lifestyle? Can you still save for your kid's college? Can you still plan for retirement? Can you do whatever? Can you
afford your medical bills to get better?
Right.
So like I always say, the health insurance, that's great. I want everybody to have it, but that pays the doctor. That doesn't pay you. That's for bills and pills, right?
Right.
So your income stops. So we got to make sure that's coming in. But outside of that, for the group benefits, then there's a definition change. And this is where it's important. This is where we summarize it for financial advisors, for clients, so they are crystal clear on what that expectation is. So typically it'll say they 24 months own occupation. And what that means is if they can't perform the duties of their job that they're employed at, why their employer's giving them their coverage, and they're under the care of a physician and not working, then they can go and claim, right? Pretty easy. After the 24 months, that definition drastically changes, and that's where that expectation starts to dwindle again. Because
So what is it that changes after 2 years?
the definition of disability, so how the carrier would adjudicate a claim or how you qualify for a claim.
Right. So there's two main categories.
Yeah.
First one is
The first one would be called, for group insurance,
For group
called
insurance.
own occupation.
own occupation.
Yep.
Okay.
You can't perform your own occupation, the
Right.
one that you were engaged in a time of claim. And then after 24 months, it becomes any occupation.
Okay.
You must be able to perform or unable to perform any occupation based on your education, your training, and experience.
So let me give you an example and tell me if this is what you're talking about. I'm a surgeon.
Yes.
I go in and I do whatever kind of surgery it might be. So something happens, I fall ill or some type of injury, and I'm now on claim. I've got 2 years of claim where I just am unable to do my surgeon stuff. And then beyond that, if I'm able to flip burgers, they're going to kick off my disability income,
Yep.
right?
Correct.
So even if I can't go back to the surgery room, the operating room, so let me start that over. So if I can't go back into the operating room, but I can work at Burger King flipping burgers, they're going to say, you know what, you don't qualify for benefits anymore.
Correct.
And that's with the group policy.
That's with group insurance. Correct.
So getting your own policy is slightly different.
Yeah. And what we would do in that sense is we would never get rid of the group. Group insurance stays because it's a free benefit
Sure.
and it's good insurance and it's better than nothing.
Right.
Because back to the underwriting, what if something is precludes you from, or what if you have something that precludes you? Yeah. So that in that instance where you have a surgeon that has group benefits where they can't, say they got the tremor or something that's keeping them from performing surgery. And after 2 years, they can go and teach or flip burgers or work at Walgreens or what have you. That insurance carrier is not going to pay a claim
At all.
at all. They'll stop paying.
You're on your own.
That's right. Correct.
And if you've got doctor debt, and not every doctor falls into this, but a lot do, the doctor lifestyle,
Yep.
you probably can't afford what that second career might be if you're trained to be a surgeon or
Correct.
name the profession.
Correct.
Right.
And so group benefits are good. They're free in most instances where the employer is providing them. We
Right.
never get rid of them.
Right.
We make sure we summarize and put it in the file, document that these clients know what they have.
Right.
And then what we do is we offer them a path forward, because once they actually know the expectation of what is provided to them, they'll start thinking, okay, if something happened to us or something happened to me, would everybody be okay?
Right.
So one thing I always say is it's an obligation to yourself and to those that depend on you,
Right.
because you're not the only one affected if you get too sick or injured at work.
Right.
You know, I've got kids, you've got kids, they're affected.
And I like to say that with life insurance too. You don't buy life insurance for you.
Right.
You buy it for whoever's going to still be around if you're not.
Correct. Correct.
And I try not to tag on or try not to pull on emotional strings, but that is the reality of the situation. It's kind of, hey, let's think outside yourself, which is sometimes difficult to do because people are just so focused on what's ahead of them in my career, the money that I'm spending. But
Yeah.
it's kind of a reminder that you buy insurance for protection of not just you but others.
Correct. Yeah. And you don't need, and your stance on it, you don't need to beat the emotional horse. You know, you don't need to
Right.
beat it down.
Right.
People get it, right? But that's the group benefits. So when you buy your own policy to complement or supplement, once the people are finally realizing, like, oh my God, this is a need. There's a gap here, somewhere to happen. Then you can get into the robust plans that are going to not have the limitation of 24 months on their own occupation,
Right.
that aren't going to have sort of pre-existing conditions, that aren't going to be taxable, that aren't going to be capped, you know, that will follow them from employer to employer. Because I think the average person stays in a job for 2 years nowadays.
Right.
You know, the gig economy is real. You know, there's people that have to purchase their own benefits because now they're 1099. You see that in the IT world a lot.
Right. A lot of government contractors.
Government contractors all around here, you know, so people have to purchase these types of insurance plans, whether they have group or they don't.
Or go uncovered.
Or go uncovered.
And you won't realize that's the wrong move until it's too late, right?
That's the big mistake, yeah.
I found that there's really, when you look at insurance, and I think long-term care and disability are similar in the way that people look at them. Everybody is sold that life insurance is a good thing and that it's worth whatever the money is if you can find the right coverage. It's interesting that disability and long-term care, they fill very similar needs because you're still around, but there's just this aversion to paying money because I guess you don't get anything for it.
Yeah.
You drive a car, you hope that you don't get in a car accident. You don't go, woohoo, I get to make a claim when I rear end somebody because I'm texting. So I just find that's kind of funny. But I think people fall in three different categories. It's the don't care how cheap it is or how affordable it is. I'm just not going to get it.
Right.
The look, I get it. I had a family member, a friend, or whoever on claim. I'm seeking somebody out to buy this. And then most of the people probably fall in the category of, I don't really know enough about it. Do I need it? How does this stuff work? It seems complicated.
Right.
And I don't know if it's expensive or not, but it's an extra expense. So for someone that really doesn't know much about it, the underwriting doesn't cost anything. What does that underwriting process look like?
Gotcha. So the underwriting would be often, it's a paper application. You got to fill that out.
So your application.
Application and a telephone interview. With disability, it's very similar to life insurance, but there's that third, we need tax forms.
Okay.
So it's a little bit more intrusive where you got to get the 1040s, the W-2s, and the schedules depending on what type of employee or employer they are.
Right. And the purpose of that is, I guess they don't want to insure someone for $1 million of income and the potential claims that would come with it if they only make $50,000 a year.
Correct.
That is an exposure, because who wouldn't want to go find a way to be on claim for $1 million a year of income when you were used to making 50?
Correct. Or the flip side, kind of like when you buy a mortgage, they want to make sure you can pay the premium.
Sure.
Right?
Yep.
But yeah, exactly. And then in some cases, we might need a paramed, a blood and urine. And a paramed is just a series of questions, height and weight measurements, and they might do some labs like blood draw and urine draw.
So somebody will come to your home or your place of work, wherever you want them to, and do just a quick, brief exam.
Correct.
Not too intrusive.
Correct. Hopefully we can push that to a side with some of the carrier programs that are available.
Okay.
But just to set expectation, that's probably where you're going to be.
Sure.
And then that is sent to the carrier, and the carrier does their underwriting. So that'll be generating an offer. And believe it or not, in the disability world, the carriers are really actually trying to get these people insured. They're not looking for reasons not to insure them.
Right.
They're looking for reasons to get them insured.
Sure.
To protect, but they need to protect themselves as well. So they're not in the business of taking on adverse risk, right? Right, exactly. Because they got to protect other policyholders as well.
To make sure that they've got the money to pay the benefits, the claims.
Bingo. Right, so we typically use big, old, strong carriers, but then the offer comes down,
Right.
and then the offer, whatever, depending on whether it is, you can either tailor it, walk away from it, it doesn't cost you anything, you have no obligation to buy it.
Sure.
Or you say, that's great.
Yep.
Yes, absolutely, we'll put that into the plan.
Okay.
Yeah.
Dave Beck from Disability Insurance Services, thanks so much for coming. So you typically work directly with financial advisors.
Correct.
And if you're an individual that happens to be watching this, or a business owner or a professional, like I mentioned earlier, it's best to contact your financial advisor to see what disability insurance options are available, and they'd be able to help. And maybe if you're a financial advisor, you'd be a good person to contact to help make sure that what is out there is at the leading edge of disability coverages and things like that.
Correct. Absolutely.
And how can people get a hold of you?
So you can call me. My direct line's 410-790-0846. Or you can shoot me an email at dbeck@diservices.com.
All right. And before I let you go, you are a bass guitar player.
Yes.
All right.
For sure.
Now here at Harford Retirement Planners, our logo is a harp.
Yes.
And we actually have a miniature harp in the lobby waiting area. So I'm going to ask you to play a little bit of a tune on the harp
Bring it on.
All right. Mike, can we get the harp?
I don't know. I have no idea.
Just a little riff.
It's very eerie.
It's perfect. Perfect. Well, Dave, thank you so much for coming in and sharing your knowledge and insights.
Absolutely. Thank you for having me. This was incredible. Thank you very much.
Perfect. Dave. All right. Dave Beck, please connect with him. And if you have any questions about disability, work with your financial advisor. And as always, thank you for watching.